Before you place your next trade, you need to hear this. I want you to imagine something. Picture yourself sitting at your screen after 3 months of perfect discipline, 3 months of following your rules, respecting your stop losses, keeping your emotions in check. Your account is growing steadily. You feel confident, controlled, maybe even a little proud of how far you've come. Then it happens. One trade, one setup that looks perfect, the kind of setup you've been waiting for all week. You enter with confidence, but the market has other plans. Within minutes, your position moves against you. Not just a little, a lot. And in that moment, everything you've built crumbles. Not your account balance, though, that takes a hit too. Something deeper, something more valuable. Your discipline, your emotional control, your trust in your own process. You double down, you chase. You abandon every rule you've spent months perfecting. By the end of the day, you've erased weeks of progress, not just financially, but psychologically. How do I know this story so well? Because it's my story. And if you've been trading for more than a few months, it's probably yours too. Every trader wants control, but control is what destroys them. You felt that panic. The chart moves, and your brain whispers, do something. Today you'll finally understand why your brain trades against you, and more importantly, how to stop it from happening again. The market doesn't care about your discipline streak. It doesn't reward your months of perfect behavior with guaranteed profits. It's indifferent to your progress, your goals, your carefully constructed trading plan. But your brain cares. Your brain keeps score. And when that score gets disrupted, when your narrative of steady progress gets shattered, something primal takes over. Most traders think emotional trading is about fear and greed. They're wrong. Emotional trading is about identity. When you've been disciplined for months, discipline becomes part of who you are. You start to see yourself as a controlled, rational trader. Your self-image depends on maintaining that standard. So when a single trade threatens that identity, when one loss makes you feel like a failure, your brain doesn't just react to the financial loss, it reacts to the identity crisis. And that's when discipline dies. I learned this the hard way on a Tuesday morning in March. I'd been having my best trading month ever. 15 consecutive days of following my rules perfectly. My win rate was solid, my risk management was tight, and I felt like I'd finally cracked the code. The setup appeared on the euro to US dollar. Everything aligned. The trend was clear, the entry was textbook, the risk reward was perfect. I sized my position according to my rules, set my stop loss, and waited. The trade moved against me immediately. Not unusual, I'd seen this before. But this time felt different. This time, the loss felt personal. After 2 weeks of wins, this single loss didn't just hurt financially, it hurt my ego. That's when the whisper started. This can't be happening. Not after such a perfect streak. Not when everything looked so right. I should have taken the loss. My stop was there for a reason, but instead I moved it. Just a little, I told myself. Just enough room for the trade to breathe. Then I moved it again and again. By the time I finally closed the position, it wasn't just a normal loss anymore. It was 3 times my usual risk, 3 times what my carefully calculated position sizing allowed. But the damage wasn't done. The whisper was louder now. You need to make this back. You can't end the day red after such a perfect run. What happened next wasn't trading. It was emotional chaos disguised as market analysis. I saw setups that weren't there. I convinced myself that every price movement was an opportunity to recover. I abandoned my timeframes, my risk limits, my entry criteria. Each trade was bigger than the last. Each loss made the next trade feel more urgent. By the end of the session, I'd blown through more capital than I'd made in the previous 2 weeks combined. But here's what really destroyed me. It wasn't the money. Money can be made back. It was the realization that all my discipline, all my progress, all my careful psychological work could be undone in a single session. That terrified me more than any loss ever could. You're not broken. Your brain is just wired for survival, not for trading. The same mechanisms that kept our ancestors alive in dangerous environments now sabotage us in the markets. When you experience a significant loss after a period of success, your brain doesn't see it as normal market variance. It sees it as a threat to your survival. Not physical survival, but psychological survival. The survival of your identity as a competent trader. This threat activates your limbic system, the ancient part of your brain responsible for fight or flight responses. Suddenly, rational thought takes a backseat to emotional reactivity. Your prefrontal cortex, the area responsible for planning and impulse control, gets overwhelmed by the flood of stress hormones. In this state, the discipline you've spent months building becomes irrelevant. Your brain reverts to its most primitive programming. Take action. Do something. Anything. Just don't sit there and accept the threat. But here's the cruel irony. The actions your brain demands, the trades that feel most urgent, the positions that seem most necessary, these are precisely the ones that will destroy you. So how do you trade when your instincts want to destroy you? The answer isn't what most people think. It's not about building more willpower or creating better rules. It's about understanding that discipline isn't something you have. It's something you are. And when that identity gets threatened, when one bad day makes you question everything you've built, the solution isn't to fight harder. It's to understand why the fight is happening in the first place. Take a breath, because what comes next might change how you see the market forever. Your brain doesn't distinguish between a real threat and a perceived one. When your trading account drops, when your perfect streak gets broken, when your carefully constructed self-image as a disciplined trader gets challenged, your nervous system responds as if your life is in danger. This isn't a flaw in your psychology, it's a feature. For thousands of years, this rapid threat detection kept humans alive. The rustle in the bushes could be wind, or it could be a predator. Those who assumed the worst and reacted quickly survived to pass on their genes. But financial markets aren't bushes, and price movements aren't predators. Yet your brain treats them the same way. A losing trade triggers the same neural pathways as a physical threat. Your heart rate spikes, your breathing becomes shallow, your vision narrows, your thinking becomes binary. In this state, the nuanced decision-making that successful trading requires becomes impossible. You can't analyze probabilities when your brain is screaming danger. You can't execute complex strategies when your nervous system is flooded with stress hormones. This is why one bad day can destroy months of discipline. It's not about the money you lose, it's about the neurological cascade that loss triggers. Your brain hijacks your behavior, overriding months of careful conditioning with ancient survival programming. But understanding this process is the first step to transcending it. When you recognize what's happening in your nervous system, when you can identify the moment your limbic system takes control, you create space between stimulus and response. And in that space, choice becomes possible. The traders who survive and thrive long-term aren't the ones who never experience this neurological hijacking. They're the ones who've learned to recognize it, accept it, and work with it, rather than against it. They understand that emotional trading isn't a character flaw, it's a human response to perceived threat. And once you understand the mechanism, you can begin to build systems that account for it. The most dangerous moment in trading isn't when you're losing money, it's when you're making it. Success breeds overconfidence. Overconfidence breeds carelessness. And carelessness breeds the kind of devastating loss that can wipe out months of careful progress in a single session. But there's something even more insidious at work here. Something that happens beneath the surface of conscious thought. Your brain starts to believe its own story. The story that you figured it out. That you're different from all those other traders who blow up their accounts. This is the setup for the most painful lesson the market teaches. The lesson that no amount of discipline can protect you from yourself. When you're on a winning streak, your brain chemistry changes. Dopamine floods your system with each profitable trade. Your confidence builds with each correct prediction. Your risk tolerance expands as your account balance grows. Scientists call this the winner's effect. The same neurological process that makes athletes perform better after victories also makes traders more aggressive after profits. Your testosterone levels rise. Your cortisol levels drop. You feel invincible. But the market doesn't care about your biochemistry. It doesn't reward confidence. It punishes overconfidence with ruthless efficiency. The setup was perfect. Too perfect. After 3 weeks of disciplined trading, after following every rule in my carefully crafted plan, I was up 37% for the month. Not just good, exceptional. The kind of month that makes you think you finally crossed over from struggling trader to consistent winner. The euro to dollar was trending beautifully. Clean impulse moves, clear retracements, textbook price action. I'd caught 3 major moves in the pair over the past week. Each trade executed flawlessly, each exit timed perfectly. When the 4th setup appeared, I didn't hesitate. The trend was strong, the entry was obvious, the risk reward was compelling. But this time, I made a subtle adjustment. Instead of risking my usual 2%, I increased it to 3%. Why? Because I was confident. Because the setup was so clear. Because I'd been right so many times recently that being wrong felt impossible. That small adjustment changed everything. The trade moved against me immediately. Not unusual in itself. Markets often test your resolve before moving in your favour. But this test felt different, sharper, more personal. My usual stop-loss would have kept the damage minimal, but at 3% risk instead of 2%, the loss stung more than expected. And when something stings, your brain demands action. I told myself I was being strategic. The overall trend was still intact. This was just a deeper retracement than anticipated. A little more room, a slightly wider stop, and the trade would work out. But markets don't care about your justifications. They don't honour your analysis or respect your confidence. They simply move according to forces far larger than any individual trader's beliefs. The wider stop got hit. Then I convinced myself to re-enter at what looked like a better level. That stop got hit too. Each loss made the next trade feel more urgent. Each failure made recovery feel more necessary. By the end of the session, my 3% loss had become a 15% drawdown. 3 weeks of disciplined profits erased in 4 hours of emotional chaos. But here's what really broke me. It wasn't just the money. It was the realization that I wasn't who I thought I was. The disciplined trader I'd believed myself to be was just an illusion. A story I'd told myself during a brief period of favorable market conditions. When those conditions changed, when the market tested my true character, I failed completely. You think discipline is about following rules. It's not. Discipline is about maintaining your identity when that identity is under attack. Think about what happens when you string together a series of winning trades. Your brain doesn't just register the profits, it updates your self-concept. You start to see yourself as someone who understands the market, someone who can read price action, someone who has an edge. This identity shift feels empowering, but it's actually dangerous, because identity, once formed, will fight to preserve itself. And when the market threatens that identity with unexpected losses, your brain will do anything to protect it. This is why revenge trading happens. It's not about the money you lost, it's about the identity you're trying to preserve. Your brain would rather risk everything than accept that maybe you're not as skilled as you thought. The most successful traders understand this psychological trap. They know that winning can be more dangerous than losing because winning makes you believe your own story. And believing your own story is the first step toward destroying yourself. They approach each trade with what Zen practitioners call beginner's mind. Fresh perspective, no attachment to past results, no investment in being right. This isn't just philosophy, it's practical neuroscience. When you detach your identity from your trading results, you remove the emotional charge that leads to poor decisions. You can take losses without feeling diminished. You can admit mistakes without feeling ashamed. But developing this detachment requires more than understanding. It requires practice. Daily, deliberate practice in separating who you are from what you do. The market is not your enemy. Your expectations are. Every trader enters the market with a story about how things should unfold. The trend should continue. The support should hold. The breakout should follow through. These aren't just predictions. They're emotional investments. When reality contradicts your story, your brain experiences something called prediction error. The same neural mechanism that helps you learn also creates intense discomfort when your expectations prove wrong. This discomfort drives the impulsive behavior that destroys accounts. Your brain wants to eliminate the prediction error as quickly as possible, so it pushes you to take action. Any action, even if that action makes things worse. Professional traders learn to embrace prediction error instead of fighting it. They understand that being wrong is not a failure of analysis. It's information about market conditions they hadn't considered. This shift in perspective transforms trading from an emotional battle into a scientific experiment. Each trade becomes a hypothesis. Each result becomes data. Success and failure become equally valuable sources of information. But this transformation doesn't happen overnight. It requires rewiring deeply ingrained neural pathways. It requires building new habits of thought and response. The process starts with awareness. Noticing the moment when prediction error strikes. Recognizing the impulse to act emotionally. Creating space between stimulus and response. In that space, choice becomes possible. Let me tell you about the day everything changed, not the day I destroyed months of discipline, the day I learned to prevent it from happening again. I was watching the GBP/JPY, waiting for a breakout pattern to complete. The setup was developing perfectly, exactly as my analysis predicted. I was already calculating position size, already visualizing the profit target. Then something unexpected happened. The pair reversed sharply, breaking below key support instead of breaking higher as anticipated. My carefully crafted story was wrong, but this time, instead of fighting the reality, I paused. I took 3 deep breaths. I acknowledged what my brain was trying to do. It was trying to preserve my identity as someone who could read market patterns correctly. Instead of entering a trade to prove I was right, I closed my charts. I went for a walk. I let the prediction error exist without trying to fix it. When I returned an hour later, the market had moved even further against my original analysis. If I had fought the reality, if I tried to prove my story correct, I would have lost significantly. Instead, I had learned something valuable. The market conditions I'd been trading in had changed. My analysis framework, while useful in trending markets, was less effective in the choppy, news-driven environment that had emerged. This wasn't a failure of my system. It was information about when not to use it. That realization marked the beginning of a different kind of trading career, one based not on being right, but on being adaptive. Not on controlling outcomes, but on managing responses. The hardest truth about trading is this: your biggest enemy lives between your ears. It's not the market makers or the algorithms or the institutional traders. It's your own need to be right, your own attachment to outcomes, your own inability to accept uncertainty. But here's the paradox. The moment you stop trying to control the market, you gain control over yourself. The moment you stop needing to be right, you start making better decisions. The moment you embrace uncertainty, you find clarity. This isn't just trading philosophy, it's human psychology. Your brain is wired to seek certainty, to create stories, to defend its predictions. But markets are fundamentally uncertain. Stories change, predictions fail. The traders who survive and thrive are those who can hold these contradictions without breaking, who can plan without attachment, who can analyze without ego, who can lose without identity damage. They understand that discipline isn't about perfect execution of a flawless plan. It's about maintaining psychological equilibrium when everything goes wrong. It's about staying centered when the market challenges every assumption you've made. This kind of discipline can't be built through willpower alone. It requires a fundamental shift in how you relate to uncertainty, failure, and loss. Your nervous system doesn't distinguish between physical danger and financial loss. When your trade moves against you, when your account balance drops, when your analysis proves wrong, your body responds as if you're being attacked. Your heart rate increases, your breathing becomes shallow, your muscles tense, stress hormones flood your bloodstream, your thinking becomes rigid and binary. In this state, the nuanced decision-making that profitable trading requires becomes impossible. You can't calculate probabilities when your nervous system is screaming danger. You can't execute complex strategies when your brain is focused solely on survival. This is why meditation and breathing exercises aren't just new age nonsense for traders. They're practical tools for nervous system regulation. When you can maintain physiological calm in the face of financial uncertainty, you can think clearly. When you can think clearly, you can trade effectively. But most traders never learn these skills. They rely on willpower and determination, not understanding that these psychological resources are finite. When stress levels rise beyond a certain threshold, willpower fails. Determination crumbles. Ancient survival programming takes over. The solution isn't to eliminate stress. Stress is inevitable in trading. The solution is to increase your capacity to function effectively while stressed, to maintain access to your prefrontal cortex even when your limbic system is activated. This requires training, not just intellectual understanding, but somatic practice, teaching your nervous system to stay regulated under pressure. Professional athletes understand this. They don't just practice their sport, they practice performing their sport under stress. They simulate game conditions in training so their bodies learn to function optimally when it matters most. Traders need the same approach. They need to practice maintaining psychological equilibrium not just when things are going well, but when everything is falling apart. Think of your mind as a garden. Every thought you think, Every emotion you feel, every reaction you have is planting a seed. Over time, these seeds grow into habits, patterns of thinking and feeling that become automatic. Most traders plant seeds of anxiety, frustration, and urgency without realizing it. They water these seeds with attention and repetition until their mental garden becomes overgrown with weeds that choke out clarity and calm. But you can choose what to plant. You can cultivate patience instead of urgency, curiosity instead of certainty, acceptance instead of resistance. These qualities don't just make you a better trader, they make you a more resilient human being. The transformation happens gradually, then suddenly. For months you practice new ways of thinking and responding. Nothing seems to change. You still feel the same impulses, the same emotional reactions, the same urge to control outcomes. Then one day, in the middle of a losing streak in the face of unexpected market volatility, something is different. You notice the stress response without being consumed by it. You feel the urge to react emotionally without acting on it. You maintain your equilibrium while everything around you is chaotic. This is mastery. Not the mastery of markets, but the mastery of self. And once you achieve it, trading becomes not a battle to be won, but a dance to be enjoyed. Won, but a dance to be enjoyed. But there's something deeper happening here. Something that goes beyond nervous system regulation or stress management. Something that touches the very core of who you are as a person. You see, when you trade, you're not just risking money, you're risking your sense of self. Every position you take is a statement about your beliefs, your analysis, your judgment. When those positions fail, it's not just your account that takes a hit, it's your identity. This is why paper trading feels so different from live trading. It's why you can be profitable on a simulator, but lose money with real capital. The money creates stakes that go far beyond the financial. It creates psychological stakes that most traders never acknowledge, let alone address. Think about the language we use. We don't just say a trade lost money, we say we were wrong. We don't just analyze what happened. We judge ourselves for letting it happen. We tie our self-worth to our win rate, our ego to our profit and loss statement. This is the invisible battlefield where most trading careers are won or lost. Not on the charts, but in the space between your ears. In the story, you tell yourself about what it means to be a trader. The most dangerous story is the one about perfection. The belief that good traders don't have losing streaks, that discipline means never making mistakes, that success is measured by the absence of failure rather than the presence of growth. This perfectionist narrative is seductive because it feels noble. Who wouldn't want to be perfect? But perfectionism in trading is not just unrealistic, it's destructive. It creates a psychological environment where any deviation from ideal performance becomes a crisis of identity. When you believe you should never lose, every loss becomes proof that you're failing. When you think discipline means perfect execution, every mistake becomes evidence of weakness. When you tie your worth to your performance, every drawdown becomes an attack on your value as a person. The alternative isn't lowering your standards, it's changing what you measure. Instead of measuring perfection, measure consistency. Instead of avoiding mistakes, learn from them. Instead of tying your identity to your results, tie it to your process. This shift sounds simple, but it requires rewiring neural pathways that have been forming since childhood. It requires questioning beliefs about success and failure that society has programmed into you since birth. Most people learn early that mistakes are bad, that failure is shameful, that being wrong is something to avoid. These lessons serve us well in many areas of life, but they can be catastrophic in trading, because trading is fundamentally about being wrong. A lot. Even the most successful traders are wrong more often than they're right. They just manage their wrong positions better than their right ones. This reality creates a psychological paradox. To succeed at trading, you must become comfortable with failure. To maintain discipline, you must accept imperfection. To build confidence, you must embrace uncertainty. The traders who navigate this paradox successfully don't do so by accident. They deliberately cultivate what psychologists call a growth mindset. They see challenges as opportunities to learn rather than threats to their ego. They view setbacks as information rather than indictments. This isn't just positive thinking. It's a fundamental rewiring of how you process experience. Instead of asking, "Why did I fail?" you ask, "What can I learn?" Instead of thinking, "I'm not good at this," you think, "I'm not good at this yet." The word "yet" is powerful. It transforms a fixed statement about your abilities into a dynamic assessment of your current development. It opens up possibilities instead of closing them down. But developing a growth mindset in trading requires more than changing your self-talk. It requires creating an environment that supports growth rather than punishing imperfection. This means keeping a trading journal that focuses on process rather than results. It means celebrating good decisions regardless of outcome. It means analyzing losing trades with the same curiosity you bring to winning ones. Most importantly, it means surrounding yourself with people who understand that trading is a journey of continuous learning rather than a destination of perfect performance. The isolation that many traders experience makes this particularly challenging. When you're trading alone, when your only feedback comes from profit and loss statements, when your only measure of progress is account balance, it's easy to fall into perfectionist thinking. But isolation is a choice, not a requirement. You can seek out communities of traders who are committed to growth rather than ego. You can find mentors who measure success by development rather than dollars. You can build relationships that support your evolution as a trader and as a person. The market will always be uncertain. Prices will always fluctuate unpredictably. Losses will always be part of the game. But your relationship with that uncertainty, those fluctuations, those losses, that's entirely within your control. When you stop trying to eliminate uncertainty and start learning to dance with it, trading transforms from a battle into a collaboration. You're no longer fighting the market, you're working with it. You're no longer trying to impose your will on price movements, you're responding to them with grace and skill. This transformation doesn't happen overnight. It requires patience with yourself as you unlearn old patterns and develop new ones. It requires compassion for your mistakes as you navigate the learning process. It requires trust in your ability to grow and adapt. But here's what I've discovered after years of trading and thousands of conversations with other traders. The ones who last, the ones who build sustainable careers, the ones who find fulfillment in this challenging profession, they're not the ones who never struggle. They're the ones who learn to struggle well. They develop what I call emotional resilience, the ability to experience setbacks without being derailed by them, the capacity to feel fear without being paralyzed by it, the skill to acknowledge mistakes without being defined by them. This resilience isn't built in the moments of success. It's forged in the crucible of difficulty. Every losing streak you endure with grace makes you stronger. Every mistake you learn from makes you wiser. Every moment you choose growth over ego makes you more complete as a trader and as a human being. You wanted control. Now you've found something better, understanding. The market will always be uncertain. Your reaction to that uncertainty is entirely your choice. Every losing trade is a teacher. Every emotional impulse is information. Every moment of panic is an opportunity to build the mind that creates lasting success. You're not chasing trades anymore. You're building the trader who doesn't need to chase. If this helped you see yourself differently, subscribe. Let's rebuild how traders think, one mind at a time.